You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast, coming to you from Montecito, California. And today, before we begin, I want to remind you, as always, that we have a website associated with this podcast called wealthformula.com. Lots of resources there, including opportunities to join the accredited investor club of Wealth Formula. There is lots of activity in there as of late. We've talked about the situation in the markets right now where the rates are going down and they are projected to continue going down. So we know that. And unfortunately, those, some operators still can't get out in time because they have mortgages that are expiring, et cetera. And so that's creating this window of really distressed assets that we're trying to get our investor group exposure to. And we have some opportunities right now. So, if you're interested, make sure you are an accredited investor, make sure you go to wealthformula.com and sign up for that accredited investor club. Now, as far as today, let's talk a little bit about due diligence. Okay, due diligence. It's certainly something you do when you make a big investment or you're buying a business or something like that. That's what we're used to thinking about that. But it's actually something that really should apply to all areas of our life. I mean, whether you're signing a contract at work, getting involved in a new relationship maybe, or even deciding which dating app bio seems like it won't end in a true crime documentary. So in the business world, due diligence means, doing your homework before diving into any deal and checking financials, understanding the risks, making sure everything is as legit as possible before you sign on the dotted line. Just like you wouldn't buy a car without checking under the hood, you should, as much as possible, make sure that you can do the same vetting of any kind of opportunity that you can before you get involved. Again, this goes to your personal life as well. I mean, to be honest, these days, if you're in the digital dating space, as who knows, maybe I am, the little bit of light social media stalking is probably a good idea. But listen, going back to the financial stuff, one thing to remember, and it's important, is that sometimes you can do all the due diligence in the world and still fall short. And you don't need to go any further than the most famous of such failures of due diligence, which is Bernie Madoff. The guy had years of audited financials because, by the way, that's what you always hear is the gold standard, right? You have audited financials. Well, this guy had years of audited financials, still managed to scam investors out of billions. And it wasn't because people weren't doing their due diligence, but because Madoff was a master manipulator who played the long con, right? He reminds us that no matter how careful you are, sometimes bad actors can slip through the cracks, and all we can do is know that we did our best. I will say this, that in my experience and having seen some of the things happening in the, podcast space, and this ecosystem and investments, the thing that it is clear to me that it's so much easier to have a bad actor do this kind of thing in business type investments. There's too many moving parts in businesses to make, sometimes to be very, to be able to be 100% clear that something is legit, and too many players sometimes where the reliability of information can, depend on some level of trust. And that makes it a real challenge. So in general, the less variables, the better. And even though in the last couple of years, real estate has not been in the place to be necessarily, and you might have taken your lumps in the long term. Certainly I have. In the long term, though, here's the thing: is that it's very, very hard to fake a building. It is very, very hard to have a piece of real estate and a big apartment building that is on sale, and you can see the numbers, and you can go Google it, and you can go stand next to it. You can do whatever. It's hard to fake that. And so my point is that even though, real estate and investments have taken a little bit of a beating in the last couple of years, it's a lot easier to do diligence in that space than anywhere else. So anyway, in terms of doing due diligence yourself for any number of things, there's lots of things you can do. Start out by simply Googling. One of the cases in this space and had involved some kind of carbon capture thing or something like that. And I remember someone actually had showed me the deal, and all I did was, first thing I did was Google the CEO's name, who was supposedly super connected with the oil and gas industry, and he didn't even come up on the Google search. So, I'm not saying doing a Google search is all you have to do, but gosh, just got to try something a little bit, right? So anyway, so a lot of times, though, you might want to get a lot more granular. You might want to get, in certain cases, especially if you're looking to acquire a business or something, it might not be a bad idea to hire, a third party that specializes in this type of thing to dive even deeper. And this week's guest on Wealth Formula Podcast, well, that's what she does for a living. And certainly it's something, if people want to contact her after the show and have something that you want her to do, then great. But along the way, she actually provides quite a bit of information for us, a lot of little pearls that you can do on your own. And we will have that interview right after these messages. Wealth Formula Banking is an ingenious concept powered by whole life insurance. But instead of acting just as a safety net, the strategy supercharges your investments. First, you create a personal financial reservoir that grows at a compounding interest rate, much higher than any bank savings account. As your money accumulates, you borrow from your own bank to invest in other cash-flowing investments. Here's the key. Even though you've borrowed money at a simple interest rate, your insurance company keeps paying you compound interest on that money, even though you've borrowed it. Net result, you make money in two places at the same time. That's why your investments get supercharged. This isn't a new technique. It's a refined strategy used by some of the wealthiest families in history, and it uses century-old, rock-solid insurance companies as its backbone. Turbocharge your investments. Visit wealthformulabanking.com. Again, that's wealthformulabanking.com. Welcome back to the show. Today, my guest on Wealth Formula Podcast is Cynthia Hetherington. Cynthia is the founder and CEO of Hetherington Group, a consulting, publishing, managed services, and training firm that leads in due diligence, corporate intelligence, and cyber investigations. She's the author of OSINT, which we can get some clarity on, the authoritative guide to due diligence, essential resources for critical business intelligence, and that's the third edition. Welcome, Cynthia. How are you?
Buck, thank you very much. It's good to be here.
Good. And so tell us a little bit about what you do here. What is OSINT?
OSINT stands for Open Source Intelligence. It's an acronym we borrowed from the intelligence community in the Department of Defense.
Okay.
It's, for the listeners, and my readers will hate this, but I always call it's very glamorous Googling.
Yeah.
It's finding out information as a resource towards an end product. So perhaps you're trying to understand a competitor out there. You could go out and find all these great resources, learn more about them, read their Instagram, get their corporate reports. You could do something as straightforward as that, or vetting mis and disinformation so that you can understand what the challenges are that you're being presented with, to doing a school report on Marco Polo. Got it.
So so tell us a little bit about sort of what exactly open source intelligence gathering is, and who is it relevant for?
OSINT is definitely relevant for the business community. Information is now the commodity that we're trading in. We've dealt with a mining, an ore economy. We've dealt with financial economies. We've dealt with NFT economies. Now information is the economy. So the person who has the best amount or the first or the newest information is going to win. understanding where the leads, the breaks, or the current trends are going will give a company that advantage towards understanding more, and especially for investors.
Can you give us a sense, kind of like, obviously my audience is not necessarily a tech audience. And so when we talk about what exactly, can you drill down a little bit on this open source intelligence gathering? Presumably it involves some artificial intelligence or open source. I guess that's, it has many connotations, I guess, in blockchain. What exactly makes it open source, and how is it different from standard Google searches?
The thing with open source information is it's unregulated data. This is not private. We call it private identifying information. So open source is everything but social security numbers, people's names and addresses. It's unprotected information. Anything outside of that is open source. It's just, it's out there. So I can, for an example, if I'm going to be looking at doing an investment in cold chain shipping, I'm a shipping and receiving specialist, and I'm going to start doing cold chain shipping. Well, I'm going to need to understand an entire market. Who are the competitors out there? What is cold chain involving? Where's the manufacturers? Where's the business disruption? What does cargo supply look like? Every one of those value chain pieces, or supply chain is a great example. Supply chain model. Every one of those supply chain pieces in the model need to be investigated, which is open source intelligence.
Okay, so then what are the mechanics of that? How do you do that?
You could do it as simply as using a web browser and some time on the internet. You can have qualified and quality databases and resources. So in our world, in my field, there are companies like Thomson Reuters and LexisNexis and TransUnion, where they have really great data sources. They've aggregated that data. They're not creating it. They're aggregating it, making our work faster and more efficient.
So your business actually goes and uses these other sources to try to businesses will consult with you to try to navigate, to essentially do that heavy lifting for them. Is that correct?
Well, we get hired for one of three reasons. It's been what I've said since I've started the company. Consultants are brought in because we have a subject matter expertise, and we are fast at this. We do this quite efficiently, and we give clients good resources. Or they'll hire us because they might be the Pinkerton or the BDO, or they have their own Aon, they have their own investigative team, but they just don't have enough manpower. And the third reason is actually plausible deniability. We might be coming up close and touching things that they don't because they're regulated. They have compliance requirements like financial services. And I might see things where, as a licensed professional, I'm a licensed private eye, I'll say, oh, I see this thing, yet I know my customer shouldn't have possession of that data or that information because that would put them at stake. So because it's in the open, I'm going to catch it. However, how it's handled to them. So that's why we'll get brought in for helping them understand where their challenges are, where their opportunities lie, weaknesses and threats.
Okay, so let's take a small business. Can you give us an example maybe of how like a small business might come to you? And let's try to stick to sort of mom and pop level businesses, because my audience is not a bunch of institutional people or anything like that. So let's say we have a small business owner. We have a lot of professionals. I don't even know if it would relate to something like a physician's office or a dentist's office or whatnot. But can you give us an example of how you basically do that process?
Small businesses, mid-market businesses, they actually need this more than the large institutions. Why? Because they don't have lawyers sitting in the office next to them. So, the business, I'm a small business owner. I've got to do everything here.
Sure.
And one of the things I care about, what you care about? Reputation.
Mm-hmm.
So you want to stay abreast as to what people are saying about you, your product, your show. If you're a doctor, gosh, there's tons of lists where people are rating doctors now and making judgment calls based on what other people are writing. Unfortunately, there are people who are actually hired or purposefully damaging the reputation for competitive advantage. There's no law against that, unless they're getting caught. And then I guess you could go to libel. I'm not an attorney, but we'll get pulled in to start looking and say, hey, what do I look like? And, even people are searching for jobs. I get this call often like, hey, I'm out there job hunting and I don't know, I'm interviewing great. My resume looks good. I think I'm just sound, but it's kind of funny. They always ask, what's on my file? And I like pretend to go through a file cabinet to pull out your file because everyone thinks they have like a record. And I said, well, there's not one piece of information out there that's going to make you look bad unless there is. And you would know that primarily first and foremost. But you might want to do a self-assessment, your own personal background check, just to understand what are other people seeing that you might not notice. And there could be something horrendous about you on Instagram from someone you broke up with 5 years ago.
Okay. And can you actually do anything about that, or are you just giving them the information?
We do have, actually, our biggest book of business here is what's called digital vulnerability. So we manage the online personas of a lot of people. We handle how they appear, how they don't appear on the internet. We make sure that some people can enjoy their privacy. So we're stripping down bits of information. And then, yes, we will wrestle with different social media platforms if we find misaligned or libelous posts. Sometimes they've actually posted it themselves and they need it pulled down.
Yeah. Okay. So, what kind? So you mentioned a little bit of the reasons that you get pulled into things. I guess where's the line between how much a business can do its own due diligence versus, what you're doing? I guess you sort of talked about this, but I think what I'm trying to understand is, and I think people might be wondering is, gosh, do I need this? I mean, how do you answer that question?
My company gets hired for this one good tagline. We protect people, property, and reputation. And when I say people, I genuinely mean their lives. Like, we're monitoring the internet for trolls who are making statements like, I'm going to come and cause harm to you, your office, your executives. And there's a lot of trolling out there right now. So some of it is just hyperbole that's being thrown around in a terrible way. And some of it's very genuine and very real, and people have concern for their safety. Where does the customer come to us? When they feel like this is going to affect them personally, like this has just gone too far. This is keeping me up at night. It's a distraction in work. I can't focus on my job because I'm always worried about what's coming out on Twitter next. Or if they think it's going to affect their ability to be better in business. So this is a fiduciary requirement. If they're financially going to be damaged or they're going to lose advantage based to a competitor because they're not paying attention to what's going on out there and they don't understand the footprint. And again, reputation, it always comes back to, if it only takes one post on Twitter. I mean, we've seen where a celebrity would walk into a restaurant and say, I got bad service in that restaurant. The next day is just crickets.
Yeah, that happened here in Montecito, actually. There was an actress who got sick at one of the local restaurants, and talked about it on social media, and the restaurant basically changed their name like a week later. So, okay. Well, okay. So what else can we use this type of technology for? Can we do research on other businesses? Say, for example, if we want to invest in a business or something like that, is that something that we could potentially do?
I'm going to give you 5 things you look for in what I call red flag analysis.
Okay.
Okay. Comes right out of the book. So when I'm going to invest in a new company, I want to understand something about them. I'm kind of toying with the idea. And what we all do is we all just Google that company. The things I look for on a company, and if I'm missing certain things, it's a red flag. Do they have a company website? Is it current? Does it have all the nomenclatures that should be in there, like a copyright statement, privacy in terms of service, the fine print stuff, which doesn't present itself right away when you're looking at someone's website. But if you're a company looking for investors, you better darn well have it. I'm looking also on a website or in their way of monetizing their product, like if they're investment groups and are looking for institutional investors, if they've advertised their investment product at different price points, that's inconsistent with what that market does. But you'll find it. You'll find it in announcements. You'll find it in social media. You'll find it in news articles. I'm also going to look for the background and history of the individuals. I'll check out their LinkedIn profiles. I'll look to see if it matches up what they say their timeline is in their website. Is there any other biography I could find on them? Do these things click up? Hey, it's one thing if you're off by a couple months here or there. It's another thing if you're completely not mentioning certain parts of your background. These are all indicators of fraud, by the way. I'm a certified fraud examiner, so that's why they're flags. I'm also going to look at that company to see how long they've been in business so I can pull their corporate documents. I'll go to the Secretary of State for that company, pull their corporate documents, find out if all that's in check. And then, believe it or not, I need you to go back to traditional media. I need you to look in newspapers and publications to see if that company's been mentioned. Are there any press releases even? Do they have, because it could be new, so you might not get a lot of articles, but then the person who's spearheading it should have articles written about him or her. You know, where's all the hubbub? Is this person worth my money? And if you're missing any of these things, most corporate leaders, small companies all the way up, in fact, very much a small company, because you've got to protect your own assets. They're going to spot those things right away. And if they're going to get an ill feeling from it, trust that gut.
Yeah. Interesting. There was actually, sometimes it's not that hard because it seems like, there was actually a Ponzi scheme in this local podcast investment ecosystem where, I mean, it was very suspicious from the beginning, where it was in the, recapturing of oil and gas emissions, something like that, something carbon emissions. But when I first heard about it, the first thing I did was Google the CEO, and he didn't come up. There was nothing about him, and like he literally didn't even exist. I mean, like people don't these days. If you're in business and you don't exist on Google, then you don't really exist, right?
This is a true sign.
Yeah.
I've got a funny story to share with you.
Sure.
We had a guy in the energy market who is in windmills and solar energy, and he was presenting himself to be on the board of a company.
Yeah.
So he said, I have all this experience. Here's my curriculum vitae. Look at me. And in there, it said he belonged, not only did he belong to certain associations in Canada, but that he was on the board of them.
Yeah.
And so, I mean, now this is still open source, but it's not on the internet. We called those associations. That's still an open source methodology. And I said, hey, it was like, this was a check the box. It should have been very easy. Like, hey, is Buck on the board of this group? And they're like, who's Buck?
Yeah.
I'm like, this guy, Buck. No, I don't recognize the name. The president reaches over, grabs the phone from the person who answers, said, who are you talking about? And I said, this guy claims to be on your board. He goes, listen, honey, I've been in this industry for 30 years. I have never heard of this guy, nor is he on our board, nor is he in our association. I mean, people are going to get checked out, but they don't think about it anymore. They just, I'm just going to make this lie, and their lie is going to stick with enough people where their fraud's going to, unfortunately be fallen for.
Yeah, the energy industry in particular seems to be completely full of charlatans. It's pretty remarkable. Okay, well, so if how much does it cost to get, say there's investors who want to know, okay, I'm thinking about putting, $100,000 into this investment. I mean, obviously, it has to make sense for them to, from a return standpoint, to, decide whether they want to use a company like yours or something like that to do a little due diligence. How would they do that? Or,
It's actually not.
yeah.
Oh, go ahead.
No, I was
I
just
would
going to
it's not
say
that-
more, how expensive is it is, I guess, the question.
Well, it's not $100,000. I mean,
Yeah.
the idea that you're willing to gamble $100,000, but not take a percentage of that to make sure that you're not just throwing your money away.
Yeah.
So, it's more than likely anything less than 10% of that. It could be a couple $1,000 up to at least 10. Some of
Sure.
these investments are going to get much larger, so they're going to be more voluminous, but the customer also has full control. I mean, when cases come into my office, I can't speak for all offices, but we talk about a phased approach because I know these people, they work hard for their money.
Mm-hmm.
So they're like, hey, I'm in doubt about this company. Can you check them out? And I always, look, companies don't run themselves, people run companies. So why don't we just look at the CEO first, or
Yeah.
the lead person, the guy who's pitching? Why don't we just investigate that person first? That's just a few hours. And if that starts coming through, I mean, actually, if that's fraudulent, like if we have a problem, wow, we just saved you a lot of money and me a lot of time. But then we keep stepping up and seeing all those different aspects. Not only is this going to be a benefit to them because they're going to have some surety about who they're getting in bed with, but they're also going to be able to go to their insurance company and say, like, we've done a full vetting process of this, because they have some sort of compliance and oversight. The federal government now, we're all filing our global business ownership records. We've all been for the Transparency Act.
Yeah.
I just filed 3 companies yesterday. We all have to file. So are those, those little buttons getting pushed that we need to push? Our accountants are going to ask for us. Do we know our customers? And, I always say the least amount of times you have to talk to your attorney, the better off you are.
Right.
But when this conversation shows up, it's usually because you're talking lots and lots of dollars to fight them for. So these are small prices and short amount of time to get a lot of security.
Yeah. The one thing I'll add to this, and I mean, just speaking from personal experiences, due diligence is always retrospective. In other words, you can tell if somebody's done something bad in the past, but you're not going to be able to predict if somebody does something bad in the future. And it's important to remember because it and especially when there's businesses with multiple moving parts, that kind of thing, it becomes very challenging, to when there are people involved and you are relying on people. Sometimes you have to trust at some point that somebody is not going to be a criminal, and that is a little bit of a challenge in the especially when I think about the oil, the energy space is a constant fear of mine because I've seen so much go down in that space. But
Mm-hmm. Well, energy companies are actually some of our biggest customers,
Yeah.
and I agree with you. At some point, you just got to trust the person next to you.
right,
However, doing due diligence prior to getting engaged, this is a mantra I've been saying my whole career. An hour's worth of intelligence is better spent up front than 3 hours worth of investigation afterwards where I'm explaining to you what happened.
yeah,
So creating a baseline of we know everything about this guy, this company, this organization. This is what you're starting with. You can always go back to your baseline and understand, like, where's the pivot point? Why is this changing? This was my anticipated result because this background investigation becomes an asset in your pool of every decision you make. So once you start noticing, you'll notice problems much faster, preventing fraud way in advance.
yeah. So let's see. The name of your business is the Hetherington Group. How do we get a hold of you if people are interested?
You can come and visit me at hetheringtongroup.com. I'm also very active on LinkedIn, which is just my name, Cynthia Hetherington. And it's your first exercise in OSINT. If you could Google my name, you will find me.
There you go.
If you can't find me, then get a friend and have them help you find me because you obviously need me.
Right. Thank you very much for your time today, Cynthia. It's been good talking to you.
Buck, I appreciate it. I appreciate your listeners.
You make a lot of money but are still worried about retirement. Maybe you didn't start earning until your 30s and now you're trying to catch up. And meanwhile, you've got a mortgage and private school to pay for and you feel like you're getting farther and farther behind. Good news. If you need to catch up on retirement, check out a program put out by some of the oldest and most prestigious life insurance companies in the world. It's called Wealth Accelerator. It can help you amplify your returns quickly, protect your money from creditors, and provide financial protection to your family if something happens to you. The concepts here are used by some of the wealthiest families in the world, and there's no reason why they can't be used by you. Check it out for yourself by going to wealthformulabanking.com. Again, that's wealthformulabanking.com. Welcome back to the show, everyone. Hope you enjoyed it. And if you think it's a useful activity for one of your future transactions, then by all means consider reaching out to a third party. I have no, financial or any other kind of relationship with this group, by the way. So if you do so on your own. Do so of your own volition. I have, I'm not gonna. If you had a bad experience, don't blame me either. I am just here to provide information on this matter. Anyway, hope you enjoyed it. And again, if you have not done so and you're an accredited investor, make sure you join the Accredited Investor Club soon, because I do think this period of distressed real estate is going to become an endangered period. It's basically a period that's not going to last that long. So check it out. Go to wealthformula.com. Join us in our club, the Investor Club. That's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.